Today, we are going to be talking about APR, or annual percentage rate, and why getting out of debt isn't always a good idea. Lenders haven't been telling you the truth. Your interest rate when you borrow money from the bank is not what they say it is. But I want to tell you that this is good news for you. Let me explain why with a simple example. You want to purchase a piece of real estate, but you'll need to get a mortgage, so you meet with a loan officer. You decide to borrow $100,000 on a 30-year fixed interest amortized loan. The loan officer tells you that they do not charge any fees or points for the loan, so there are no loan costs to you. The APR will be 6%, and that will make the payments $599.55 per month. The loan is completed on January 1st, and your note says that the interest rate is 6%. So, my question is 6% the actual interest rate on your loan? The answer is no, it is a gross interest rate. So, how do we find the net interest rate? One factor that affects the interest rate are your personal income taxes. As a property owner, the government allows you to take the amount of interest you pay each year and subtract it from the gross income for your income tax calculation. The first year, you will pay the lender $5,967 in interest. If you're in the 30% tax bracket, the government is actually going to give you back $1,790 of the interest you paid through your taxes. You therefore, in reality, paid $4,177 in interest on the loan, which means you actually paid a 4.18% net interest rate, not 6%, a reduction of 1.82%. Another interesting factor that also occurs during the year is inflation. Let's use an example of an inflation rate of 4%. This would mean that money has lost purchasing power 4%, and at the end of the year, the dollar is only worth 96 cents. Because of inflation, your payment to the bank of $599.55 has actually decreased in value by $23.98. You are paying with cheaper and cheaper dollars. Your interest rate has gone down from 6% to 5.62% because of inflation, a reduction of 0.38%. I hope you can see how tax benefits and inflation changes your net interest rate and your loan balance significantly each year. Once we take both into account, your gross interest rate of 6% has now been reduced to a net interest rate of 3.8%. This is an example of good debt, especially if you are purchasing cash flow assets with your debt. But wait, we have another great benefit to discuss with you. At the end of the first year, your bank loan balance is $98,771.99, but because of our 4% inflation rate, your bank has lost $3,950.88 in purchasing power, and the net value of your loan balance is now just $94,821.11 in purchasing power. This process continues year after year for the length of time you pay the loan. You will continue paying with cheaper and cheaper dollars. This is why I love banks that loan me money on real estate. The Richie team wants to help investors like you to be as successful as possible. Smart investors understand and take advantage of inflation and tax benefits to increase their yields. For more information on investing in residential income property, please go to our website, bakershieldincomeproperties.com. If you would like a free market analysis or consultation, feel free to contact us at bob@therichieteam.com or call us at 661 332 4716.